Good day, ladies and gentlemen. Today I want to share with you 7 reasons why the next financial crisis will be worse than the last. It will be worse. It might be worse. It can be worse. I don't know. You decide. My mission is to warn you that there is something to be forewarned about. And you know that forewarned is forearmed. If you've been following my YouTube channel for a while, you know that I keep saying the next financial crisis might be in your driveway. The next financial crisis is not far off. But how do I know and why do I say that? Well, there are some signs. And what is really interesting is that while some people lose their jobs in the wake of the financial shakeup, the others get richer and happier. Why? Because they are getting ready. They are constantly getting ready. They are learning new things. So, since it's always important to know your enemy to win, let me start sharing with you these 7 reasons why the next financial crisis will be or might be worse than the last. And the first reason is, of course, the US national debt. $20 trillion. $20 trillion, ladies and gentlemen. It's not a joke. Is there a way to avoid paying your credit card debt? Is there any way to avoid paying your mortgage? Not today, not tomorrow, not this week, but you are in debt, you have to pay. This is how it works, this vicious materialistic world. And now the mic is yours. Post a comment below this video and let me know how you would pay the US national debt if you were a president, how you would deal with it. Reason number 2. The US government has its eye on retirement accounts. If you think it's a joke, just look what's happening in other countries. Probably you've heard that over previous years, Portugal, Ireland, France, Poland and some other European countries sized retirement account assets in order to help plug holes with government deficits. Even though I am an optimistic person, but I tend to listen to people who are smarter than me, wealthier than me, better educated than me, and who predicted the market so many times that investors, journalists, and general media pay attention when they speak. Jim Rogers, a famous American investor, businessman, he believes that private accounts might be the next ones the government raids. And what is a private account? Maybe 401k? Maybe Roth IRA? Maybe traditional IRA? Won't it cause some sort of financial shakeup? Now I have a question. What do you think is the safest global bank in the world? The Bank of America, JP Morgan? Global Finance magazine puts out a yearly list of the top 50 safest global banks. On your screen you can see this list. And believe me, it's extremely difficult to find an American bank here. Only 3 American banks have been included in this list in 2017. Back in 2015, there were 5 American banks in this list. Therefore, and this is the reason number 3, American banks are not the safest place for your money. The top 5 American banks are now larger than before the crisis. While this might seem like something good, we remember that the collapse of Lehman Brothers in September 2008 brought down the world's financial system. Any of these banks failing would be catastrophic because the five biggest American banks are even bigger and more critical to the system today than before the crisis began. Reason number 5. The FDIC, the Federal Deposit Insurance Corporation, admits it lacks the reserves to cover another banking crisis. Do you understand what it means? Do you even understand what it means? The FDIC can only cover 1% of bank deposits, or only $1 out of every $100. The reason number 6 is a nice reason to talk about. The S&P 500 index is growing like crazy, and that's really good because economic growth means an increase in real GDP, which in turn means that there is an increase in the value of national output, and it's always a great pleasure to grow your investment portfolio in an easy and effortless way, isn't it? But we all understand that this cannot go on forever. The higher you climb, the harder you fall. The reason number 7, uncertainty. Volatility is good for the stock market, low volatility. And in 2017, the stock market is so low, it seems to be napping. But look what's happening in the world today. Britain has left the European Union. Sweden is ready to follow their example and quit the EU by the end of this decade. Brexit, Swexit, what's next? Nobody can predict how the next years will go on. Wars, hurricanes, uncertainty is still in the air. These are the 7 reasons I wanted to share with you in this episode. Add to this the derivative bubble of hundreds of trillions of dollars, unemployment, joblessness, and you will probably agree that the next financial crisis might or will be worse than the last. A lot of people say that it will be worse, but I, as an optimistic person, hope that it might and won't be worse. Anyway, we must be ready. So what should we do? Diversification. Diversification, this is the key to successful investing. Mutual funds, stocks, bonds. Basically speaking, we do not diversify because this is what we were taught to do. This is what we were taught. But diversification is not about investing in stock A, stock B, stock C, buying bond D and bond E. Smart investors are adding wild variety of assets to their investment and retirement accounts. And since my YouTube channel is about investing in precious metals, and since we understand and know that gold and silver has been known for ages as a safe haven in case of the stock market collapses, I would like to offer you a free precious metals investing guide. Just click the link below this video or click this YouTube card, fill out a quick form and receive your 100% free guide and learn how you can protect your wealth against future financial crisis, tax-free, without any penalties or fee. And let me know what you do in order to protect your financial future. Are you prepared for the next financial crisis?